Okay, so today is what is it? July 26th of 2024, and this will be my daily outlook as well as the um, yesterday's price action. So yesterday worked out exactly as I had expected. Um, on the draw higher, we drew into 50% of this range here, and I didn't catch this one, though I did catch a trade later on. But I'll go ahead and go through this one first. So this one, I had expected a reversal, and yesterday in the live stream, I didn't really get an entry. Um, yeah, I didn't get an I didn't get an entry because, as you know, price did what's the word? Did draw lower, and I had drawn these lines as well as this line as well as this low here as the last lines of defense if I wanted to get long, and so we did. This was the last one. If price would have sliced through this one, I would have been a non-participant in the day, but it didn't. So price did draw into that gap, previous weekly gap. It didn't necessarily draw into it. What it did is it actually double topped it. Well, it didn't really double top it because there is no other relative equal low, actually double bottom. There's no relative equal bottom in that area. As you can see, off by a couple of ticks. And so when I noticed price, when I noticed price displace higher, I waited for price to show me some sort of inversion or some sort of gap. And I knew that given the aggressiveness of the sell-off, the reversal, if there was one, would be just as aggressive. So I jumped in here, right here, and the reason why I covered. There we go. Okay, so see this little tick right here, 62, and this one is 62.5. 0.75, just by one tick. So I market it in. Sometimes when you're looking for an aggressive move, it's okay that you don't get a perfect entry. Um, yeah, it's okay that you don't get a perfect entry. As long as you are correct on the bias, then you'll be good. And so I took this long, and I actually covered into 50% of the range, which was right over here, about a 60-point win on two contracts, which is okay for me. The reason why I didn't get into a full position, 5 or 10 contracts, was because I had wanted one more sweep into this gap right here, and because we didn't get that is the reason why I just ended up taking it. So once I realized the price was displaying and I knew these were the objectives, I came back for the 11 o'clock macro. On the 11 o'clock macro, price had already swept or closed above 15-minute gap, 15-minute gaps right here, 15-minute gaps, 15-minute gaps here. Price had closed above that, creating those 15 minutes into inversions. And so I waited for price to come down and test the gap. And on the 5-minute, I saw this gap here. And I knew that if price was still bullish, then it would target these highs here. And that's what's called the low-hanging fruit. As always, these are my favorite types of setups because price displaces immediately after it liquidates some areas. And it always happens that the same way. The displacement is always sudden and fierce, just as it is when you try to target the lows. And so that's what happened. I got in here. I waited for price to show me a violation of the dealing range, or not a violation of the dealing range, but a violation of a breaker in this situation. And so I waited for that, and I realized that this was the new dealing range on the 1 minute. And so if I'm trading with the trend, I'm expected to look for I'm expected to look for what's the word? Geez. I'm sure you can see it there. It's very small. There it is right there. So I'm expected to get into the range. And so I waited on the 1 minute. I waited for market structure shift, changing the state of delivery, price displays higher, left the gap here. I entered right here and covered into this area. And this, once again, was a 50 point win on a semi-full position, which made up more than enough for the day. And so all week I've had green trades, a few red ones, but those are just impulsive ones. And so after price reached 50% of this range, I realized, or I knew that price would likely rebalance this huge imbalance. Now, if you look at the 1 hour, you see a couple of gaps here. But the reason why I decided to short was, okay, let's go back here. Okay, so once price drew up to this high, I had expected price to just continue drawing higher. And so I started looking for a draw higher, and this range right here, price drew into 50% of the range, and I had expected something. So once price displaced higher here, I jumped in. But what happened was I should have listened to the higher time frame, because on the higher time frame we had immediate rebalances on the hourly. And as you can see here, there was no gap here on the higher time frame. And so as soon as I got that, I realized I was offside, and I actually ended up taking a loss, which wasn't bad, because like always, you keep your losses low and your winners big. And so I got stopped out once price closed below this gap here, which is right around here. It was actually right here. I didn't wait for price to sweep these lows, because as you can see here, we do have relative equal lows, and the market, as I always say, loves to target these equal lows or equal highs if there are some. I actually should have gotten short here, but obviously I didn't. So what did I do? I waited for price to tell me that price would likely draw lower, and so I was waiting for a higher time frame or an intermediate time frame high to be drawn. And as you can see here, this high was swept by this move higher. This high was not swept. That's SMT. And so once price started drawing lower, there really was no entry, unless you think of this one as an entry. But for me, I like waiting for the intermediate time lows and highs, and the lower time lows to get drawn. And so I watched price displace lower. Actually, I can delete this. I watched price display lower. Price broke through this low here, still closing very lower aggressively. And then when the retracement happened, I realized that that this right here is intermediate term high, and so I jumped in right here with right here. Wait, that's not it. Is that the 1 minute? Oh yeah, it is. Okay. All right, so yeah, I jumped in right here. I think my entry was 5461, and I actually covered into a 12-point win. One contract, but again, one contract is way better on minis. One point is $50. So yeah, you do the math. But anyways, that's why I went into here. Now, the reason why I didn't wait for price to sweep this low, again, this is the same type of play that I traded in my morning time frame right here. And again, the reason why I didn't wait for price to sweep these lows was because we were so close to the close of the day. And so I covered into, there was a higher PD array here, and that's the reason why I covered into that area. I think it was this right here, this old high, because this right here is an order block. On the weekly, I think we do have something going on here. But yeah, that's the reason why I covered that. But anyways, so today came on, and I realized the price was drawing higher. Well, not realized. We all saw the price was drawing higher, and so my objective is not necessarily the highs, not the highs. If they draw higher, then you know what? That's because I'm offside. I'm actually looking to get short, and the areas I'm actually looking to get short are the same areas where I suspect price would draw lower, and that's right here. Since this right here is intermediate term high, if my bias is correct, price will most likely not break above this high. It could still because this is the 15-minute and this is the 1 hour. Okay, so I'm expecting for this to be intermediate term high, long-term high, intermediate term high. And so if price draws higher, maybe rebalancing this whole imbalance, then I suspect to get short here eventually. Did I ever connect? No, I didn't. So same thing here. Same thing here. This one is the weaker of the two because this one we did reprice into 50% of the range, and so I do expect price over the next few months. Not few months. I had expected a reversal, but one key factor I completely overlooked was the fact that we are actually in a correction, and so the correction whenever price falls, yeah, let's go with the weekly. Whenever price draws lower than 10%, it means that we're in a correction phase. This is a correction, so this too should most likely be a correction. And if we are drawing lower, then I suspect that price will draw about as not up to this low, but about as much as this low, causing symmetry in the market. I like symmetry. That's where I kind of like getting a feel of where price might reverse. And so, again, I do suspect if price does not continue drawing higher, I suspect this to be the high and this right here to be a market maker sell model. The only way I will start shorting is when I see an intermediate term high get drawn around here somewhere on the lower time frame. And I want to see displacement for price to draw lower, because as you can see right here, this is the buy side of the curve, and I suspect to the sell side of the curve to be drawn. I do suspect these highs to get broken, so either or, whichever one doesn't get broken is the one I'll most likely look to short. But if price continues drawing higher, then I will most likely stay away from the market. Today is Friday, and we do have news, so I do suspect there to be volatility. If there isn't, then that's fine. Currently, this remains as dealing range on the lower time frame. This is the dealing range on the lower time frame. So we are technically, drawing higher. But again, I do suspect this to be the high for price to draw itself. And again, if we continue drawing higher, that's fine. I am most likely not going to trade today if price continues to draw higher. If it draws lower, the only way I'll short is if I see displacement and exactly what I want to see, which is always as per my model goes. Let's see here. I really need to make sure I have these all the time. Darn. Alright, let's just copy and paste it real quick. Where is it? Where is it? Where is it? Obviously, it's not here. No, it's not here. Oh, man. Oh, you know what? Let's just do this. Download as JPEG. Here we go. Alright, here we go. Okay, so here we go. So this is what I'm looking for. There we go. Okay, so this is what I'm looking for today. So far, we have this right here. I'm looking for a violation of the dealing range, so I would like for this low to get swept, price to target the highs, and then I look for some sort of reversal in that area. We might have already gotten it here, but on the really lower, on the 5-minute time frame. But again, I'm not looking to trade the 5 o'clock, not the 9:30 Judas. And if that happens, then that's fine, because eventually, if price is to continue the sell model, um, I do want to catch the low hanging fruit, my favorite type of play, which is to short or long the last second stage of distribution. Um, yeah, the second stage of distribution to target the lows. And I would like to target these London lows if price, does its second stage up here. Or if price continues drawing lower, then I'll probably look to short somewhere here to target these lows over here, these relative equal lows here. So that's the plan for today. Again, if price does second stage here, then I'll target these lows here. But again, I do want to see something in the lower time frame to confirm that we are in the distribution phase of this, and we are in the distribution phase and on the sell side of the model, sell side of the curve, on the on on these areas, on ES and or NQ. So that's the plan for today. Actually, let's go ahead and connect to data, see what we get. I'll just connect it and then disconnect real quick, because again, I am looking to trade uh, this area, try to get the first distribution here, also try to get the first distribution. But if I don't get it, then that's fine. I'll carry the next one. I'll catch the next one, and the next one, if it does, will hopefully happen in the 11 o'clock macro or the after 13:30. All right. All right. Let's see what we got here. Okay. All right. So we do have displacement lower. We do have a gap here in the 15-minute. Same thing here. We have a gap here. Yep, there it is. Okay, let's take a look at the 5-minute. All right, so we do have a dealing range here. Oh, darn. Okay, and we do have a dealing range here as well. Yep, right here. Okay, so if you are looking to short these areas, then you do short, but you cover down here. Same thing here, but you have to short above equilibrium, which is right here. Same thing here, equilibrium, above equilibrium, you short here, and this is where you would have gotten in. But again, I would like for one more sweep, at least into this gap. As you can see here, price didn't really sweep into it, but it did create that. So let's take a look at the 1 minute. So if you are trading these, this short, then this low here will be the first objective. Now it could be so that price immediately reprices higher, and that's what I'm looking for. I'm looking for something into this area. Um, Same thing, something into this area, so that I could get short. And again, if that happens, then that's great, because once this price sweeps this low, then that objective is done, and price could easily just reverse and set up the sell model for me. So we'll see. We'll see what price decides to do. I may look to long this. Okay, I may look to long this at the 4 o'clock, at the 10 o'clock macro, because price is drawing a gap here, and whenever price does that, it is hard, since it is a 4-hour PD array. It will be hard for price to displace lower, if the draw, obviously, if for some reason the draw is higher. And so you'll see signs of displacement higher if price is going to sweep that high one more time. Because if it does, then that means that we might get a 3-drive pattern here on the, let's take a look at the hourly. And that's what I'm looking for. I'm looking for a 3-drive pattern. 1, 2, one more drive higher, and then you get the displacement lower. Same thing here. 1, 2, one draw higher, and then we get displacement lower. Because this whole move right here is displacement. And again, I am looking for these areas to get ran through. All right. So these areas are the ones I'm looking for price to get ran through. Let's go ahead and draw these here. Because right now I'm not drawing the 4-hour, because obviously the 4-hour candle hasn't closed yet. So it might be so that price closes that 4-hour. But you know what? Let's so this low and constant encroachment. Okay, and same thing here. Let's do it like this. Oh, oh, I already disconnected. Okay. Here and here. Okay. All right. So yeah. So as you can see here, prices closing above constant encroachment. So that is a bullish sign. Same thing here, bullish sign. But again, I would love it if price did not sweep these lows and drew higher. Same thing here. I don't want these. Let's see here. Here we go. Yeah, see here, price is closing above this gap, tapped into consequent encroachment, and that's fine. I want price to draw higher, and then I want to catch the reversal if it happens. If it doesn't happen, then I'm away from the market, and just waiting until price offers me something. Again, I'm not looking for longs. I believe after this week's price action, I do believe we have a lower. We are drawing to lower prices, and this is where the 20, 40, 60 rule comes into play. Because when price is pulling back or correcting, you have to start targeting 20, 40, 60 days out. 20, 40, 60 days out. Or if this low gets broken, then we have 20, 40, 60 days out. Because each one of these monthly candles are technically 60 days, 20 days. So 20, 40, 60. So price may want to decide to target this gap here on the monthly. Again, we are still on a bullish trend, long time frame, which is the hourly, the monthly and the weekly, but we're on a downtrend on the daily. And so that's why I'm still I'm bearish biased now, for the next few weeks or whatever. But I might be wrong again. So who knows? But until then, I'm just following price action. I'm seeing what price is offering me. We have displacement lower. We have price that took out various areas of liquidity. So the logical move for price to do is to start seeking lower prices so that it could pick up more liquidity. Because yesterday, like I said, yesterday it did. And I'm glad that, I had this area as the area where it might look to reverse. And again, that's why I'm glad that I was able to catch the short here. Because again, here price did not offer. If these candles look something like, let's see, here we go. If these candles look something like this, even with one gap, or something like this, or even something like this, then it makes logical sense to get long one of the gaps to start targeting the highs again. And obviously we didn't get that with with this displacement. And I'm glad I realized that after I had my first my afternoon loss. Though it wasn't much at all, it allowed me to recoup that back and then some with a short in this area. But yeah, that's it for today. We'll be back at the 10 o'clock macro. I think the 10 o'clock macro will offer an opportunity this time because, um, yeah, because time seems ripe for that move to happen at the 10 o'clock macro. If it doesn't happen by 11, then I'll be done for the day. Um, yeah, I'll be done for the day because I do believe that we draw lower next week. And if that happens, then Fridays is usually when price offers some sort of expectation for the following week. And if that happens, then that means that this right here will become breakers. If this high doesn't get broken, this becomes a breaker. And so for the coming week, you start looking for price to draw away. And if that happens, that's when you have these areas, right? That's when you have to start looking at the standard deviations to see how far price is likely to go lower. I don't think we come all the way down here. That's just I don't know. I can't imagine it just yet. I do think we only hit one standard deviation, and so if that happens, then we'll be good here. Because if that happens, again, we have to look at the 2060 20, which is right here, 60, 2040, 20, 40, 60. So it does make sense. Yeah, okay, it does make sense for price to target these areas, but I don't think price draws that low. But again, we might just do that because we are nearing an election and we do have what, a couple of months till then. So enough time for price to draw lower, and then going into the election, we get the rally followed, followed by the Santa Claus rally and all that stuff. So we might draw higher. But again, that's what I'm expecting on the higher time frame. So hopefully that does happen, and it allows us for some good opportunities. Same thing here. Standard deviation would be here, and if you start looking at the 20, 40, 60 rule, it's at this low, right? It's at this low, so it does make sense that price might draw into that low. Obviously, I don't think we will come all the way down here. It's just nonsense. I highly doubt that. Um, So yeah, that's all I have for today. Again, I'll be back at 9:45 to see what price is doing, but I have a good feeling, so I'm not going to be too overly aggressive today, given my week's profits. So I will probably scale down, but if I see an entry, I'll take full. I don't know. I'll take a position within my means. And so yeah, I'll be back at 9:45.